Namaste, welcome back to the channel. Today's topic is fundamental for anyone, suitable for beginners, CSA students, even law aspirants and small business owners. The topic is partnership firms. So, what are the partnership firms? How are they formed? What are the laws govern the partnership firms? So, let's break it down in small and simple language. What is a partnership firm? The definition as per Section 4 of Partnership Act 1932. A partnership is a relationship between persons who have agreed to share the profits of business carried on by all or any one of them acting for all. I'll read out again. A partnership is a relationship between partners who have agreed to share the profits of the business carried on by all or any one of them acting for all. This is a very clear definition. And maximum and minimum number of partners, minimum 2, maximum 100 as per section 1464 of Companies Act 2013. So the minimum partners shall be 2 and maximum 100. As per section 464 of Companies Act 2013, the maximum is 100. Earlier it was 50. What are the key features of the partnership? There is a contractual relationship, profit sharing, mutual agency, and unlimited liability, joint ownership and management, no separate legal entity. So these are the key features of the partnership. And types of the partners, types of the partnership. So based on the duration, there are two types: partnership at will and particular partnership. Then what is partnership at will? This is based on duration. So the definition of partnership at will as per section 7 of Partnership Act 1932, a partnership at will is a partnership where no fixed duration is mentioned in the partnership agreement. So there is no fixed duration, there is no specific project, or there is no specific objective is stated in the agreement. So such partnerships continue as long as the partners want to them. Either partner can dissolve by giving a notice. So this is what the partnership at will. The key features: no time limit is specified in the agreement and continues indefinitely until a partner decides to leave. Dissolution is easy. Any partner can end the partnership by giving a notice in writing to all the partners. So this is common in long-term business relationship or family business. Example, let's A and B starts a garment business. They agree to share profit 60:40, but do not fix any time period or mention any specific project. So this is a partnership at will. If A one day decides to exit, we can simply give a written notice and partnership stands dissolved. And another partnership form that is called particular partnership as per section 8 of Partnership Act 1932. The definition: a particular partnership is formed for a specific venture or for a specific project or undertaking or for a fixed duration mentioned in the agreement. Once the purpose is completed or the time ends, this partnership automatically dissolves unless the partners decide to continue. So the key features of this particular partnership are formed for a specific purpose or for a specific duration, and automatically ends once that purpose is completed or the time ends. It can be converted into partnership at will also by mutual agreement after expiry. So this is ideal for short-term project or one-time projects. Example, A, B, and C form a partnership to construct a residential apartment and sends the flats. So sell the flats. So the agreement states that partnership will end once the project is completed. So this is called a particular partnership. After completion, they wish to continue working together. They need new agreement or a revised existing one. So now we'll explain a quick comparison, quick difference between partnership at will and particular partnership. Regarding the duration, partnership at will, there is no duration specified. At a particular partnership, yes, duration is specified. So that is a fixed time or fixed task. In terms of dissolution process, so in partnership at will, the partnership will be dissolved by giving a notice from any partner. This is more flexible. Whereas in particular partnership, the dissolution is automatic on completion of the time or on completion of the task. So the flexibility is limited to the agreed scope. See, example, partnership at will, the example is ongoing textile business because duration is not specified. And particular partnership, the example is real estate projects. And another type of partnerships based on registration. So the partnership, registered partnership and unregistered partnership based on liability. So general partnership and limited liability partnership under LLP Act. And general partnership, yes, partnership under Partnership Act. And formation and registration. Now we'll discuss about the formation and registration. See, actually, no mandatory requirement of written agreement, but partnership deed is highly recommended. So what are the contents of the partnership deed? Name, capital, profit ratio, and duties of the partners, etc. These are all the mandatory contents in the partnership deed. And registration with the registrar of the firm. What are the benefits with the registration? So once they're registered, so the partnership firm get the ability to sue and ability to enforce their rights. So these are the advantages with the registration. What are the rights and duties of the partners? So rights to participate in the business, to share profits, to access books of accounts. And what are the duties of the partners? So to act honestly and to not make secret profits, to be liable for losses, and the dissolution of partnership. So what are the modes of dissolution? So voluntary dissolution by agreement or compulsory if death, insolvency, etc., or settlement of accounts. So these are the ways of dissolution of the partnership. And comes to the taxation of the partnership. So treated as a separate taxable entity under Income Tax Act. Tax rate 30% plus surcharge plus cess. Yes, remuneration and interest to partners allowed as a deduction subject to conditions in section 40B. So now I'll explain the difference partnership firm versus LLP versus company. See, the legal status. So partnership firm is not separate legal entity, whereas LLP and private company, they're all separate legal entity. Status is there. Liability, then partnership firm, unlimited liability. Partners are liable. Whereas in LLP and private company, there is a limited liability will be there. That is an advantage with LLP and private company. Another feature, registration. Partnership firm, it is an optional, whereas LLP and company is a mandatory registration. Comes to compliance, partnership firm, a low compliance, whereas in LLP it is a moderate compliance, private company, high compliance. So now we come to the conclusion. If you are starting a business with friends or family, partnership firm is a good place to begin. But understand your rights and duties very clearly. Also consider registration and proper documentation to avoid future disputes. Then now, if you found this video helpful, please don't forget to like, share, and subscribe for our corporates. Thank you.